₹364 338 પ્રાઇસ બેન્ડ. IPO 22મી મે IPOની ઓપનિંગ છે અને 27 મે સોમવારે IPO ક્લોઝ થશે. 21મી મે એન્કર બુક પબ્લિશ થશે. IPOની સાઇઝ છે 600 કરોડ આશરે. 29 શેરની લોટ રહેશે. IPO 75% QIB, 15% HNI અને 10% રિટેલ. કંપની નંબર 1 રેન્ટલ સ્પેસમાં છે અને એના પિયર કમ્પેરિઝનમાં કરતાં 4 ગણા વધારે મોટી છે.
I'll quickly talk a little bit about the business. When we started the business, we were trying to solve for 3 problems that were there. One, in the workplace, commercial workplace, which people use for their office spaces. Second, we believe that the growth in the infrastructure in the country would not keep pace together, so commute times will increase. As a result, people will want workspaces closer to their homes, so accessibility becomes important. And the third was ease of use. Anybody who builds out a 25-50-seater office understands the complexity of acquiring space, designing and then maintaining that space. So for a smaller cohort size, we could have a plug-and-play solution. So these were the 3 problem statements we are solving on the demand side: flexibility, accessibility and ease of use. We believe a straight lease model where you're paying a fixed rent, putting down your own capital as a pure model is not viable, and that's how we believe a healthy mix of what we call managed aggregation, where a landlord is a partner, to straight lease. Having a healthy mix of it is the right model to go forward. Large portion of our demand is about 56% is for more than 100 seat customers. 44 is less than 100 seat customers. We believe this becomes a healthy mix because clearly then you are able to address every cohort size demand for every type of company out there.
So if you look at the rise of co-working, it originally started as a global phenomenon. The key APAC cities like Singapore, Hong Kong, Shanghai, there the flex percentage as a percentage of total commercial real estate ranges from 3 to 6%. Key reasons why occupiers use co-working of flex spaces in global markets: one is convenience, second is flexibility, third is capex to opex use case. So what we expect that by calendar year 2026, the flex as a percentage of total commercial real estate will be about 16%, which in a layman term means that every 6th lease could turn out to be a flex or a co-working lease. If you look at the total Indian commercial real estate market, it's about 1.5 to 1.6 billion square feet. About 900 million square feet is across organized segment, 832 million square feet in tier 1 cities and 68 million square feet across tier 2 cities. Now 74% of this supply has a non-institutional owner. As you can see over here, we have been able to grow our operational seats from 30,000 in March of 21 to 105,000 in December 23. And the managed aggregation portfolio, it used to be about 46% in March 21. It has been grown to 66% in December 23. So we have been able to clearly demonstrate that we can grow our supply in a very fast fashion over the last couple of years and across the model of our choice. Few other aspects of our deal. So we do both straight leases and managed aggregation. I've seen a revenue growth of 75% since FY21. In 9 months of FY24, we clocked a revenue of about 616.5 crores. And then EBITDA margins of about 31%. Cash EBIT margin is a better reflection of our business because under India's accounting, the rentals are charged below EBITDA. So we clocked about 10.9% cash EBIT margins, and you can see a growth in terms of from 4% to about 11% in 9 months of FY24. We are trading at very high ROCEs. So 9 months ending FY24, we are clocking ROCEs of about closer to 50% because of our capital efficient model. As a company, we are debt free on a net debt basis. The top 5 customers contribute to about 14% of the revenue. We operate across every segment of the customer base. 100 plus segment of the customer base contributes about 56% of the revenue, and less than 100 seats remaining 44%. Less than 100 seat segment of revenue is where we get also better realizations. So our usual net churn is about 1.2% on a monthly basis. We have created a very strong demand generation team. Almost about 63% of our demand is generated through our own internal demand generation team, and 37% it's driven through multiple brokers, which is international property consultants and domestic property consultants. In terms of our occupancy, we have been trading at healthy occupancies across our centers. As of December 23, 75% was the blended occupancy for the overall portfolio. 83% is the occupancy for the portfolio of centers with a vintage of 12 plus months.
One of our focus areas going forward is going to be on managed aggregation. We have perfected that model and we'll continue to grow that. Clearly, as customers come to us, they have requirements in terms of conveniences, and we currently offer them food and beverage, IT services, and so on. And we believe that portfolio can grow. So we will continue to offer better services and convenience to the customers, and obviously add to our revenue pool. In terms of existing markets, we will continue to go deeper into tier 1 cities. I mentioned tier 2 cities. Obviously, we are currently in 7 of those. We will add 3 more. So about these 19 total cities will, where we believe the growth journey of India from 3 to 5 trillion economy will play out.